Kia ora, and welcome to another CarbonCurious Ask Me Anything webinar. Today, we are going to be talking about ETS market insights and developments, and we have a special guest speaker, Cathy Lawless from emsTradepoint here today. Welcome, Cathy. So my name is Rowan Sprague. I'm a carbon forestry specialist here at CarbonCrop. And again, as I mentioned, we have Cathy Lawless from emsTradepoint, and Cathy is a senior commodity markets analyst. So yeah, she can help explain a bit of what has happened, at least in the carbon market recently. If you have questions today, drop them in the Q&A section. So there's at the bottom of your Zoom screen, there's a little Q&A button. Click on that and type your question in there, and we'll get to that at the end. So this is a bit of an intro to CarbonCrop if you're not aware of how we work. So we do everything from an initial free land assessment to registering your forest in the ETS with MPI, and then through to helping you earn and sell your carbon credits. And we also help with ongoing compliance, such as filing emissions returns, and also keeping on top of what the latest policy changes are and letting you know what they mean for you. And at CarbonCrop, we know forests. So we have assessed over 1.9 million hectares of land in New Zealand, which is about 7% of the land area of New Zealand. So pretty excited about this number. And it's also working. So we have over 300 landholders who have signed up with us. And those landholders, or the forest of those landholders, has removed over 350,000 tons of carbon dioxide, which represents a bit over $20 million in carbon credits that have been earned by those landholders. So that's pretty awesome. And we also specialize in native forests. So this is data from MPI. In the ETS of all the forests that are registered, only 17% are native forests. But at CarbonCrop, because we specialize in native forests, over 80% of the forests that we register are native. Okay, I'm going to go over and hand over to Cathy to talk a bit about what has been happening recently in the carbon market.
Thanks, Rowan. So yeah, as Rowan said, I worked for emsTradepoint, and for those of you who do know us, we run one of the secondary markets for buying and selling NZUs in New Zealand. I presented maybe about 3 months ago now, and this was the graph that I presented to you. I thought I'd include it in this presentation, so you could refer back to it, assuming that you might want to watch the recorded session of this, and just take a look of kind of what's happened historically. But I'm not going to go through it right now because there's been so much happening, and I don't have time to do all that and talk about what's going on at the moment. So if you could flick to the next slide, we can take a look at what is happening at the moment. So the previous slide looked at what had happened over the last 2 years in terms of NZU prices. Now these are the prices taken from the emsTradepoint. And this slide is just taking a focus on essentially the last 6 months. So what's happened since December last year. So some of you will know that in December last year, the government released its unit and price settings for 2023, and that had a really, really big impact on prices. We can see this decline in price from the graph in front of you, which drops pretty consistently all the way down to April. And then we do see a little bit of volatility coming through from April through to right now. So just as a recap, I've got there in green, the government announces that it is going to be reviewing the emissions trading scheme. Now, after that, we saw a sharp decline in prices. It's worth noting at this point that the market is very, very sensitive to what the government is saying, and this because it's a market that's wholly controlled by the government in terms of issuing NZUs. Now, we fast forward a little bit, and we can see some volatility where the price fell and then the price increased a little bit. Now, these kind of volatile moments that we're seeing of prices falling and increasing are generally around a bit of demand for units. So we were leading up to the surrender period, which is the period where emitters need to surrender or give their units to the government. And that was happening around that time that you can see price increasing during the April period. Then the Climate Change Commission released a draft on its second major advice package, which again had a big impact on prices. And we can see that $10 drop in prices, which happened at that point at the end of April. Now, very importantly to the carbon market, we have the auctions, and these are government-led. Now, we had the government-led auction back in March, which failed to clear. So that means no NZUs were sold because the price that needed to be achieved wasn't achieved. The government placed settings around price, which kind of prevents the price that units are being sold at varying too widely from the pre-existing market price. So we can see here on the graph, I've marked where we hit the June 23 auction. So this was back a couple of weeks ago now. And that also failed to clear. So that means no units so far in 2023 have been sold via the auctions. It's worth noting that less than 4 million units were actually bid for in this auction. Now, this is really important because it shows the kind of demand that's out there. However, we did see a small increase in price after this auction, and this was mostly down to those who lost out. So there were some parties that needed to buy units in this auction, and then they went to the secondary market to be able to get units. So this did see a small increase in price, up to almost $60 on emsTradepoint. However, we then reached the big crux in the market, which was the government releasing its consultation for the review of the ETS. Now, if we refer back to that little green recap box, the government did announce that it would be reviewing the ETS. So this isn't brand new news, but it certainly had a really, really big effect on the market. Now we can see that the price where the government released it, that it was going to consult on the review of the ETS was up close to $60, and it's since fallen to just over $40 on the prevailing market prices. So Ryan, if you can flick to the next slide, I will have a go at talking to you a little bit about the MFE consultation and kind of why it's happening. So I took this snippet from the MFE website on the consultation, and this gives the 4 options that have been laid out by the government. But what I thought I would do before delving into that is kind of give you a bit of a background on why the government is reviewing the ETS. What's wrong with it? Why is it happening? So the Climate Change Commission, back in its first suite of advice, suggested or recommended that the government did review the emissions trading scheme. Now, if we look at emissions trading schemes globally, forestry removals are treated generally separately from emissions trading schemes. So this means that emissions trading schemes focus on gross emissions, which are basically reducing the emissions being produced by emitters. When we talk about net emissions, this includes emissions removals being the removals by forestry. So the New Zealand emissions trading scheme is very unique in that respect, in that it includes both incentivizing reduction in emissions, as well as incentivizing the net emissions through forestry removals. There has been an awful lot of commentary in the media about this review, and I do recommend that you all go and take a look at what's been said out there. There's a lot of really, really useful commentary from a lot of experts in the field. But I'm just going to focus a little bit on some articles that I've read and taken information from those in terms of sort of what the industry is feeling in terms of the ETS. But first, the reasons that we're having the ETS review. So firstly, going back to what I mentioned, that the NZ ETS focuses on net emissions removals rather than gross emissions removals. Therefore, the market is dominated by these removals. And the effect that that has is it doesn't correctly incentivize emitters to reduce their emissions, because they can essentially go out and buy emissions units, so NZUs, from forestry. Now, the problem with that is that these forestry units aren't controlled by the government. It's basically up to the market how many forests are planted to get NZUs. And therefore these emitters can just go and buy these forestry offsets. Now, meeting targets through forestry isn't really sustainable. Now, the problem with companies not reducing their emissions and just going out and buying removals is that in the long term, and if in the long term they're just going out and buying forestry units, there'll be a requirement for more and more forestry to be planted, which just isn't sustainable, unfortunately, in order to meet the net zero requirements. So this review is basically set to better manage the exotic forest planting. Now, secondly, emitters can obtain units from the government auction, as I talked about before. The government also issues free allocations to industry. Now, these are controlled and these are also set to reduce over time. Top of this, as before, companies can, which isn't controlled by the government and isn't set to reduce over time. In fact, it's actually set to increase over the time as incentives increase by prices increasing. So basically, there's a really useful graph actually, which was issued from analysis in the Climate Change Commission's report, which shows how these NZUs allocated by government in the free allocation and the auction are set to reduce, but also how the emissions from forestry removals are set to increase. And it'll eventually get to a point where there aren't any more units being issued by the government, but there are an excessive amount of units being issued by forestry. And what this means is that there'll be a supply demand imbalance. There won't be enough demand for emissions removals as there is supply of units coming from forestry. And at this point, prices will crash. So in the long term, the outlook is that it's not sustainable and forestry won't continue to get the high prices that they're expecting from their units. I do suggest you go and look at that graph. It does present things a bit more clearly. But what that projection says is that this is due to happen in 2037. And that's when it won't be very favourable for forestry. But this suggests that forestry could benefit in the long run from the changes that the government's proposing with the ETS. Forestry is still really, really important, so I don't want to take away from that here, and it's something worth remembering throughout this presentation. And there are a significant amount of forestry removals still required by the government to meet emissions budgets, sorry. The other reason to have the review of the ETS is that the current NZ ETS is more aligned to support fast-growing exotic pines and slow-growing indigenous reforestation. And that's something that is really, really important, and Rowan will talk to it a bit later for you. So what the ETS review will do, it'll basically look at how native forests could be better supported through or alongside the emissions trading scheme. And this is a really, really important motivation for the review. And finally, that there are land use concerns of the impact of forestry versus farming. So since 2019, the carbon price has increased, which has incentivized people to move away from farming to forestry. And this isn't necessarily always the right move, especially when it comes to exotic forests and especially permanent exotic forests. So this is introducing the concept of right tree in the right place. And how other policy interventions could help alongside the emissions trading review as well. So really important things to note on top of this is that this review, as I said before, is not about limiting forestry. The focus is on how the government can basically better control emissions. As I said before, the government has no control currently in the current state of the ETS of forestry planting. But we also want to basically support the desired levels and types of forestry. Also, another really important thing to note is that the government did dismiss the option of removing excluding forestry removals from the emissions trading scheme without providing an alternative option for forestry units. The one thing that the consultation does leave out, however, and this is probably something that will be talked about in the responses to the consultation, is what these options mean for existing forestry owners in the ETS. Based on the current emissions trading scheme settings. So there have been some commentary in the media about this, about the grandfathering and things like that. So that'll certainly be a really important part of the responses and something to be aware of when looking into the responses when the consultation responses come in. Now, also, further consultation will be required after this one. It does feel like there's a lot of consultations going around at the moment, and this can be very, very overwhelming. But this is very much just the start of the changes. We're obviously due the election this year, and the government have said that they won't be making any changes. There won't be any time to make changes prior to this election. But there will be lots of push from industry for the new government to basically really, really push for progress on this, and the discussions on the ETS, and also pass legislation quickly. Because at the moment, this consultation doesn't really give us much certainty. It just gives us a little idea of what the government is thinking, and what the market needs is certainty. So that's a really, really big issue that we're seeing, and hopefully the new government will be proactive in implementing the outcome of the consultation. But yeah, expect more to come from the government, and potentially more volatility in prices. So then just going through the four options again, I'll just do this really quickly. You can obviously read them yourselves on the MFE's website. They do a sort of really good executive summary on these options. But basically what we have here is the status quo option, which is just leave everything as it is and continue as we are. Option one, though, is basically to improve the way the ETS operates using the existing levers. So those existing levers are basically adjustment of price and unit settings. So an example of this is the government could go out next year and significantly reduce the amount of units available in the auctions. And this would obviously increase price. Now, the problem with this is that it's a very short-term problem. As price increases, this will more greatly incentivize people to go out and plant more forests, and then we'll essentially just have the same supply-demand imbalance, but at a later stage. So essentially pushing the problem back, but creating short-term solutions. Now, option two is creating increased demand for removal activities. Now, what the government means by this is basically increasing demand by opening the NZETS to international schemes. So other countries could essentially access units to buy for their own removals. Or alternatively, the government could step in and buy units. The problem with having international buyers is that the New Zealand units may not meet their own regulation internationally. So that was another consultation that's undergoing or that has undergone, is to do with the regulation of the NZU market. As other countries like in the EU and the UK, all their emissions trading schemes are regulated. So that is one issue that could come out there. And again, it's not necessarily a very reliable solution, because we can't guarantee that that demand's going to be there. So yeah, so that's again an option, but not necessarily the most desirable option. Now, the third option is to basically strengthen incentives for gross emissions reductions by changing the incentives for emissions removals. So, i.e., the government could step in and say, well, to pay for your emissions, so this is talking to the emitters, you have to buy 2 forestry NZUs to pay for 1 ton of your emissions. So this is basically like kind of artificially sort of lowering the value, I guess, of the forestry side of units. and basically, yeah, limiting them. Another option for that is to limit the time that an NZU is valid for. So sort of creating an expiry date on them, which they currently don't have any expiry date. And this will expect to reduce the supply of forestry units. Now, the fourth option, which seems to be the most desirable option, is to basically create completely separate incentives for gross emissions reductions and emissions removals. So this is essentially a proposal to separate the forestry side of units, so the removals, the net removals from the gross removals. Yeah, this is the most desirable option because it would mean that the government would have full control of the emissions being produced by companies in New Zealand, while still being able to incentivize forestry. So kind of having that separate scheme would mean that there is still a price for forestry, because as I said earlier, it's super important, forestry, for meeting New Zealand's emissions budgets. The only problem with this is who is going to be buying these forestry units if companies can't buy forestry units to surrender to the government. One option is that the government will be the buyer of these units. Now, alongside this, the government could also have other policies to incentivize forestry, which is what happens basically in other countries like in the EU and in the UK. So yeah, that's the other option. So yeah, that's kind of a very brief summary of the consultation. I do highly recommend that you all take a look at it and that you do consult. The more responses, the better, especially because this market is open to so many stakeholders, and the smaller forestry stakeholders are just important as the big industrial emitters. So I really do encourage you to respond. And as I've said, their responses are due on the 11th of August. So yeah, Rowan, I'll hand back over to you.
Yeah, awesome. Thank you so much, Cathy. I think that was probably the clearest summary that I've heard of this review. So that was great. It was really, really useful. Thank you. So I guess I'll touch a little bit about some of the things that you may have seen around the ETS, which Cathy has already talked through. Just to sort of add, I guess, another layer of that, in terms of the forestry ETS side, there is also still a backlog of registrations. So MPI has said that they are going to start processing new applications in July. So if you applied last year and you're still waiting, for example, there is still a backlog that MPI is going to be working through. So it still might be a little bit of time before your application is processed. Cathy talked a bit about the prices changing, also the auctions that failed to clear. And Cathy gave it a fantastic summary of the ETS review. And I'll talk a little bit now about the redesign of the permanent category of the ETS, because that was, I guess, the second announcement that happened last week. So there are three main parts that were in the consultation on the redesign of the permanent forest category. The first part was about which forests should be allowed in the permanent forest category. Some of those options include only indigenous and transition forests being allowed in the permanent category. By transition forests, I mean forests that start out as predominantly exotic, but then transition slowly over time to predominantly indigenous forest. Another option that has been put forward is it could be that indigenous and transition forests are allowed as well as exotic forests in certain circumstances. So those circumstances could be long-lived species such as redwoods could be allowed in. It could be that exotic forests on Maori-owned land are also allowed in the permanent forest category. Or it could also be smaller forests or exotic forests on farms could also be allowed. So those are some of the options that are put forward in that part of the review of the permanent forest category. The second main part is looking at how transition forests should be managed, and it's specifically looking at how we should do the carbon accounting. So one of the things is that when an exotic forest is transitioned to indigenous, the carbon stock usually decreases over time. So MPI is looking at how we can manage the liability of forest owners for that, because we want to incentivize the transition of forests to indigenous. But if there's a big financial risk or liability, MPI is working through how maybe that could be managed. And the final part is generally how permanent forests should be managed. So it's mostly looking at whether we are going to be required to have a management plan for permanent forests, how prescriptive that management plan should be, and also which forests are going to be required to have a management plan. So it could be that only transition forests are going to be required to have a management plan, or it could be that all forests, so indigenous, transition forests, exotic forests, are going to be required to have a management plan. So we'll see what happens there. Similar to the ETS review, the consultation for this one is open until the 11th of August. So again, as Cathy said, the more submissions, the better. Send your thoughts in to MPI on this one. And then the other thing is that tentatively, MPI has said that the changes to the permanent forest category will be implemented in early 2025. So we do actually have a time frame for this one. So yeah, we have I guess actually a bit of time before that, but that is coming. So something to think about there. So in our last webinar, we had a bit about what your options could be for different scenarios and how maybe you should think about proceeding. So I wanted to update that briefly, especially given the new consultations that have been released last week. So if you have an exotic forest and you know you want to register it, I'd recommend talking with a forestry consultant. So talk with CarbonCrop, for example, about your options of registering and averaging versus permanent. So averaging does have a bit more flexibility, but it might not suit, well, it wouldn't necessarily suit older exotic forests. But I would recommend looking at your options and thinking about what the implications are if you do want to register in permanent. If you have a native forest and you know you want to register, I would say think about applying now. I don't think there are going to be any major changes for indigenous forests other than potentially being required to have a management plan. But you will have a bit of a heads up around whether you'll be required to do that and what you would be required to do. And again, if you're working with a company like CarbonCrop, we will be able to help you out with that. But yeah, I would say think about applying now and getting your application in. If you have exotic forests, which are a bit on the fence about whether or not to register in the ETS, I'd actually recommend the same as the first one. Talk to your forestry consultant. So talk with CarbonCrop, for example, about your options for averaging versus permanent. And if you have a native forest, which again, you're a bit on the fence, whether or not you want to register, I would say think about getting your registration ready. You can see what happens with the ETS review and with what ends up happening with the permanent forest category redesign. And you can make a decision when it works for you for whether or not you want to register and I guess when you want to submit your application. Okay, we're wrapping up at least our presentation part now. So if you are at the start of your carbon journey or you're well along through on your journey, both emsTradepoint and CarbonCrop have great websites. So CarbonCrop, we have a blog that we regularly update, and we also post our webinar recordings on there too, if you want to catch up on webinars that you've missed or rewatch them. And emsTradepoint has a page specifically about carbon and the carbon market. So you can check that out for more information as well.